Hello traders, this is Rich from TradeSight. This is a look at our market preview for the coming session. This is going to be for Tuesday, July 2nd, 2013. Well, the first day of the month and the quarter's in the books, and it was an up one. But if you get under the hood a little bit and take a look at the actual trading and also the market internals, it really wasn't that impressive. So let's take a look at that, and without further ado, let's move on to the ES futures. All right, so here's a look at the ES futures, and you can see from the design of the chart that we really don't have any decent real body candles here. Everything's really kind of been colored into the dark side, which means we've been essentially mostly closing below the opens, which really isn't a sign of strength. It's really a sign of distribution. So this whole break here, even though we've been moving to the upside, has really been fraught with distribution. Today we gapped up, and that's where primarily all of the gains on the day came from. They did attempt to take the market higher intraday, ran into the 50 DMA. It was rejected there and ultimately settled below the close. Now, being up on the day versus the prior session and settling below the close, that's a camouflage sell signal, since the prior day was a similar situation. So we've got a distribution day, we've got a camouflage sell signal on the chart. We interacted with a key level, which is that 50 DMA, and on balance, even though we're up on the day, the sellers won the bar today over the buyers because they could not hold the gap and close it above the day's open to show a net gain and a positive real body. If we do continue to the upside, tomorrow to Monday's high is going to be first resistance. That's also the 50 DMA, and above that is a very prevalent level at 4/8 on the Murray Math Boss at 1625. To the downside, obviously the gap fill is going to be key, which remains open. That gap from Friday did not close yet. That's down here below 1600. And then further to the downside is going to be the previous day's low from last week. That's Friday's low at 1593 3/4, which is also the Murray Math number. As far as the NQs go, kind of a similar design. They had a little bit of a better push and actually got it up above the 50 DMA for part of the day. Tried to get into that gap, but was rejected and closed solidly below the open of the day and essentially closed on the low of the day. So it was really just a very bearish candle here, even though we were up on the day. And again, this does satisfy that camouflage sell condition, so that's another negative for the market. If we do head up, the 50 DMA is going to be first resistance, 2938. Above that, the high of the day from Monday, 2946, 47 area, and then if they can get there, the 8/8 level in the previous gap fill here that's open on the chart is going to be a big number. To the downside, that 10 EMA is going to be roughly coincident with the settlement from Friday, so that'll be first support coming in at about call it 28.99, and then below that we're going to be looking at the 6/8 level at about 28.90. All right, so here's the cumulative advanced decline lines. While we're doing this bounce, while the price action hasn't been good, we have been making up some ground here on the internal side as far as the advanced decline line goes. Let me just realign this. The breakdown level is still quite a bit higher here on the New York Stock Exchange side. That's the upper chart here. So until we reclaim this level, this is really just kind of a dunk to the downside. Keep an eye on this little trend line that is forming here. Here's 1, 2, and then the third touch will be up just a little bit higher. So that's definitely going to be important as far as the market internals go. The advanced declines were okay today. We're plus 1,300 on the New York side and plus about 1,050 on the NASDAQ side. The key development here really, though, in this chart is the NASDAQ side. We're actually getting up in the area of the old highs. So if NASDAQ can assert itself here and break out to new highs, that would be a sign here that we could return to a more positive action overall in the market. But until that happens, until we break out above this prior high on the NASDAQ side, the market advances are still suspect, and rallies should be looked at as selling opportunities, like the market participants have done today. Elsewhere internally, the total total put call ratio is about mid-range, and it's starting to decline here. We did get that reversal threshold where we got overly bearish and put that floor in the market that we pivoted off and enjoyed to the upside. But for now, we're still a long ways away from being overbought here with a climactic reading from the put call ratio. All right, and also while we're talking market internals here, here's a look at the 10-day trend. That's the 10-day average of the New York Stock Exchange trend or ARMS index. We are climbing here still, but we're still well below that 1.35 threshold for a pretty good reversal. So right now we're moving towards that area of getting oversold enough to have a legitimate reversal to the upside, but we do not have that condition just yet. Okay, now one of the other important charts to keep track of right now, especially since the NASDAQ side is trying to assert itself, is the SOX NDX cross. This is the ratio chart of the SOX divided by the NDX 100. Today we took a hit to the downside, meaning the semiconductors underperformed the overall NASDAQ. We did break out above this level and try to push up a little bit, but right now we really haven't been able to build on it too well. Right now we're starting to pull down into an area of potential support, but haven't been there just yet. You really want to see this ratio continue to put in lower or higher lows and keep breaking out to new highs off of those little recharges or those little consolidations. So we got to keep an eye on this to make sure this doesn't wind up turning into a rollover. If this is just a little pullback or a recharge, some kind of a small consolidation, that's fine. What we don't want to see is we don't want to see this breakout start to fail, because that's going to make that longer-term advanced decline line on the NASDAQ side become suspect and ultimately fail. So I think we really do need to see some decent leadership out of the SOX, and if we can continue to see that, that's definitely a plus for the overall NASDAQ side of the market. All right, so here's the multi-sector daily chart. You can see that the growth on the risk-on asset classes were fairly positive today. The strongest was definitely the BTK. That's the red line. The financials were okay, represented here by the BKX. That's the green line. The semiconductors were lower on the day, as you can see. But the real interesting part here is that the XAU is starting to turn here. You can see the huge spread here between the classic risk off sector and the risk on sectors. Starting to see some catch up here in the XAU. If this continues, definitely want to keep an eye on the XAU names, the precious metals, the silver stocks, all of those, and even the commodities themselves here. Look to buy continuations to the upside. This group's deeply oversold, pretty much abandoned, and has been a source of funds for a very long time. And the upside here could be really nice and very technically clean on any little breakouts to the upside. So keep an eye on previous day's highs, weekly highs in this area. All right, so here's a look at the individual sectors ranked from best to worst. You can see that BTK was the top performer on the day. The airlines also performed very well. The broker-dealers were strong. But now you can see the XAU was up at the top of the list for the first time in a while. So they're really starting to come on here. So definitely do not pass on those long opportunities that we talked about. The BKX was kind of middling, really didn't perform all that well, and certainly did not outperform. The concerning thing are the things that underperformed. The housing continued to underperform today. The SOX was a big underperformer, and the utilities and the telecoms were very sloppy and fraught with distribution. So the whole yield complex is really starting to affect these things. Okay, so here's a look at the XAU, the gold and silver index. Right now we've pivoted back up to interact with that 10 EMA. We're just barely above that. If we take out the previous day's high, we're going to qualify for a short-term positive as far as the trend goes. The big defining moment will be if we can take out the 50 DMA here that we've been below essentially all year. If we can take that out and pivot above that, then we've got something to talk about, and then we can talk about going intermediate positive. But first thing, let's take a look and see if we can take care of this 10 EMA, and if we can do that, then we can start talking about maybe taking a run at that 50 DMA. The SOX definitely should be monitored here. We're still having trouble with this 8 ace level. Haven't been able to get back above that. This is definitely a very bearish candle today. We opened up, closed on the low, and we do have this seeker exhaustion signal still in place, bearing down on the chart. Haven't followed through below the 50, but a little bit of a roll down here will definitely turn that for the negative. MACD has not penetrated the 0 line, but is still threatening to do so, even though it's crawling up a little bit at the moment. All right, so here's a look at the gold futures. Gold futures have bounced back up to that zero waste level, that 1250 area. That's going to be really, really key. It's a big number. If they can break loose of that and take a run at the 10 EMA, that would be definitely a very positive thing. You can see that we already settled at the 10 EMA with the gold miners. More times than not, the actual commodity producing stocks will lead the underlying commodity. So this is potentially a very bullish thing if they can build on this. So it's not a negative that the gold shares, the gold futures themselves are actually lagging what the gold stocks are doing. It's very, very typical. So don't listen to the commentators on TV that tell you otherwise. You want to see the stocks leading the commodity, and when you do that, you're actually poised for a nice move if they can fasten that together. The other thing I want to take a look at is silver. Here's a look at silver. Silver's just a little bit more positive than gold right now. We're getting a little distance above that zero waste line at 1875. We touched the 10 EMA today, and we can pivot back above that. Then you want to start taking a look at the silver producing stocks. You want to look at PAAS, PAS. You want to look at Silver Wheaton, SLW, and then even the SLV ETF if you don't trade commodities and just want some ETF exposure to the white metal itself. All right, folks. As always, thanks for listening. This has been Rich for TradeSight.